What's up, you guys? Welcome back to Young Money Investments. In today's video, we are going to be going over the highs that the SPY is having. SPY high, is it going to come down? Let's talk all about that today on Young Money Investments. All right, you guys, so we have been talking a lot about the S&P 500. If you haven't seen the news articles all over the place, then are you really even looking at the news? Honestly and truly, it has been pretty crazy. We have seen the S&P 500 really rally since the pullbacks. We've seen pullbacks kind of back down, kind of beginning of this month, I'd say, kind of 10.7, 10.14. We had some pullbacks in the S&P 500. And now here at the beginning of November, we are seeing some all-time highs on the SPY. So does that mean everything is good? Everything is gravy? Not so much. I currently am holding a position in TVIX, but as you can see right here, I also took a nice little call option on the SPY on the S&P 500. And you know, today we saw some really good returns. I'm up about 50% on that call, but that is really just a hedge against my TVIX position that I also have. Now, why am I holding TVIX? Well, the Fed just recently announced that they are going to be cutting interest rates again, one more quarter point, kind of towards the close of the year. Now, they could definitely be adding one more cut to the federal interest rates. That could be happening later on this year. They most likely, I'm like 90% sure, they will not have another cut in 2020. They like to not do things during an election year. So does that mean we could see another cut? Absolutely. Has that made the markets rally? Absolutely. Does that mean we're going to keep seeing the markets rally? Probably not. And I know before you start to hit that dislike button and type your comments, "You're crazy, Cameron. It's gonna keep going up. Things are so good right now." Hold your horses and take a look at this chart. Okay, so as you can see from this chart, the S&P 500 has continued to go up, up, and up. But what happens after the Fed day? As you can see, every single time that Jerome Powell has stepped on the mic and announced a cut recently, we've seen a pullback in the markets. Is this a coincidence? I don't know. Maybe it is, maybe it isn't. But this chart to me is a very good indicator of a pattern where we see the S&P 500 pull back, pushes up a few days after, and then gets a nice little pullback. So where do I think the charts could potentially go? One more thing that I've seen really benefit and help my portfolio is smashing the thumbs up button. Oh, also hit that subscribe button and turn that bell notification on while you're at it. I think it'll give you a few more percentage points in profit. Well, if you're taking a look here at the S&P 500, I definitely thought we could see a top out here at about 302.50. That was kind of the last previous high where we had seen a top out right here, and right here. Basically the middle of late September, middle of September, and then we had also seen one kind of here at the end of July. So with that being said, I think that we still could very easily, now that we've seen this Fed interest rate cut, at least see a pullback to here, if not more down into here at the 300 level, and then start to see it kind of creep down here into the 295 range. So what does that mean overall for you as an investor? That means don't be super bearish. I'm not trying to, go, oh, just put all your money in TVIX. Take this with a grain of salt, but I think there is something to be said that when the president comes out and says the markets are at the best place they've ever been. So as you can see, Donald Trump is saying that the economy is in the best place it's ever been. Well, we also have the most debt that we've ever had. And I don't know how you can have the best economy with the most debt a country has ever seen. So that will continue to be seen. But with that being said, you guys, I am pretty much taking a bearish stance on the market right now. Doesn't mean that I'm not going to keep holding my long-term positions. It doesn't mean I'm going to sell out. Those are positions that I'm going to continue ride through anytime that we do see a pullback. But in terms of my swing trades, I'm going to be covering right now, especially now that we've seen some good earning reports. And I also think that the markets are overextended. So that's my take. I hope you've enjoyed this video. Thank you so much for tuning in. If you want to check out the links in the description, you can find out a link to join me in the private mentorship. You can find the link to join my course as well. I'd love it if you support me and be a part of the community. That is really what this is all about, is just being able to share my knowledge with those of you out there that also want to kind of find and cultivate that passion for investing as well. So what's your plan? Tell me below. I'd love to know, what is your plan? What are you seeing with the economy? I'd love to get your take. Do you agree with this? Do you disagree? What are some points that really drive home your thesis for the market and what's going to be happening here in the next week or month or so?